Royal LePage expects home prices in Canada to rebound next year. Thanks in part to lower interest rates, the real estate giant is forecasting that the aggregate price of a home in Canada will increase 6% year over year in the fourth quarter of 2025. The price of detached homes expected to jump 7%. Condos are expected to increase 3.5%. Joining me now is Adil Danani, sales representative with the Royal LePage West Real Estate Services. Good morning. Thanks so much for being with us. So home prices going up by 6% in 2025. Put that into perspective for us, please. Is this a surprise?
Good morning, and thank you so much for having me. Our housing price survey on aggregate is, I think central to the report is that prices are now stabilizing. And we are anticipated to see price growth, albeit very moderate, over the next 12-month period. I think what we're doing really here in the market is we're trying to find our footing again. We went through this unprecedented period over the last 24 months where interest rates went up almost 4.5% over a 2-year period. So consumers were hit quite hard. And now we're finally getting back to what I would say is more of a historical norm, where prices are starting to grow again, albeit low to mid single digits. But now with rates coming down in a more meaningful way, it's going to be a catalyst for buyers that have been sitting on the sidelines waiting for a catalyst to see more affordability in their monthly payments to now come back to the marketplace. We've seen 4 consecutive rate cuts totaling 1.25%, including this large jumbo rate cut of 0.5% about a month and a half ago. So I think it's building a little bit more confidence amongst the buyer segment of the market. And we'll continue to see hopefully more rate cuts December 11th, and then January and March, the bank is meeting again for 2 more announcements before the spring market.
So even though prices are going up because interest rates are going down, you expect more people to be buying?
Well, historically, there's always been an inverse relationship. As rates come down, generally prices rise. And like we saw during the pandemic market, we saw historically low interest rates, and we saw incredibly high buyer demand. It comes down to, oftentimes, if we were just to simplify it, consumers really buy the monthly payment and not the purchase price. While the purchase price you have to be qualified for it, it ultimately comes down to what you can afford on a monthly basis. And it's clear that as borrowing costs come down, that there will be more affordability. It'll take more meaningful cuts, hopefully 3 additional cuts before the March, and traditionally spring market.
Yeah.
Before we start seeing more buyers come off the sidelines.
Let's talk about condo prices
Sure.
because they seemed pretty flat.
Yeah.
What are you watching for in terms of recovery in that part of the market?
Yeah, great question. Broadly speaking, the condo market in most of our larger markets has been quite stable. The outlier is really the Greater Toronto area. The condo prices are expected to decline because there's a ton of supply that's been under construction, and all these completions have been coming to market over the last 12 months. And there's several towers and several projects that are slated to complete in 2025. And so that segment of the market has traditionally been driven by the investor pool, and those buyers have been very quiet. So we will likely see an increase in supply, which generally means there'll be potentially downward pressure on prices. So that'll be an interesting segment to watch.
Yeah, and just quickly on that point, Adil, is that investor market still out there? Is it still something that is attractive to people buying a home or a second home or condo as an investment?
Yeah, that pool of buyers is definitely cooled off significantly from market peak. Investors are in the market for price growth. There hasn't been a ton of price growth in that market. It's going to take 1 to 2 years for that market to clean up. And I think when you forecast 3 years from now, there aren't a lot of projects that are actually now under construction. A lot of projects have gone on pause. So you're going to start seeing perhaps that market tighten up 3 to 4 years from now. It'll be interesting to see how it all plays out. I think there are a couple highlights in our housing price survey where we are seeing significant growth in certain markets. For our Quebec and Montreal markets are anticipated to see 11% price growth. Edmonton is also picking up a lot of the overflow from Calgary and seeing double-digit price growth in the detached market. So there are some some highlights and some markets that will be outperforming our broader pricing targets.
Adil Danani is the sales rep for the Royal LePage West Real Estate Services. Thanks so much for being with us.